Hello there and welcome back to my YouTube channel and to today's video all about everything you need to know about the net profit ratio. My name is James. If this is the first time you've visited my channel or clicked on one of my videos, I'm an ACCA qualified accountant from the UK, and on my channel I help out accounting students around the world pass their examinations. And of course, I always dedicate my videos to my lovely subscribers. And today is no different. As you can see on the screen here, Anurag kindly requested some more ratio videos. So all of the playlist is dedicated to the lovely Anurag. So if you'd like access to all my free videos, just hit the subscribe button below and leave me a comment with any requests that you have. I answer them all and more than happy to help. So be sure to give the video a massive like, just like the photo on the screen as well. I really appreciate all the support. So feel free to share the video with any of your friends as well, because you know it's going to help them out. As in today's class, we're going to be talking about what actually is profitability, how it links into the net profit margin and ratio with the actual formula, a working example. So if you've got a question in front of you now, if you watch this video all the way to the end, you're going to get really high marks on it, as we're going to actually calculate an example, analyze an actual net profit ratio, and then apply that to a real world application. So you're going to cover all bases, and as the title of the video says, you have everything that you need to know about the net profit ratio. So first of all, we're going to actually say to ourselves, well, what actually is profitability? So we get the nuts and bolts down and all those key critical first marks in your actual examination. Well, in essence, it's actually the difference between all the revenues that a business generates, less all the costs associated from actually developing and generating all those revenues, leaves us a nice figure at the end, which is our profit for the period. And this actually determines really how effective that company, business, whatever you want to call it, is actually in producing those profits. Just try and picture it for an example that will help you, that they're going about their daily operations, maybe they're investing as well, and the higher the profitability figures are, the more effective they are at producing it, in essence. Because if you're investing in a company yourself, you're going to be taking on risk. You've got your capital being invested, and in the pursuit of that, well, going into business, you're going to want to return at the end of the day, which is your profit. And from that, you say, well, the higher the risk that I'm going to take on, the higher the return I would expect. And this is where, when you've got net profit, which is the final part of the income statement, you've got two things that you can really do with it. The first one is actually retaining it in the business, reinvesting it for future periods. Or secondly, as you can see on here, as an incentive factor, or yourself, you could be a shareholder in a business in the future, that if you invest money into the company, you'll want a return, which will be actually shared out of that net profit in dividends on there. And this is where you actually say, well, if I've got a capital lump sum of maybe £10,000, this is where net profit on here can be a measure for success of a business. That company A has a 10% net profit margin, whereas company B could have a 20% net profit margin. And this could be a critical factor in you deciding to invest in one over the other. So the formula itself, now we have the net profit divided by the revenue multiplied by 100, and the reason why we multiply by 100 is that it's going to give us a percentage figure at the end of the day. The net profit, this is the key thing and really important thing you need to get down in your notes, is that it's the revenue less all expenses, so that's the cost of sales and the operating expenses on there, all the overheads, less the interest, less the tax, and the net profit is the final figure on there. And this is where we'll also be referring to it as the net profit margin when we actually calculate it as a percentage, so you can compare and contrast it with previous year's accounts or competitors. All the items are found in the income statement, also known as the profit and loss, so we're going to come on to a working example of that next. But another key really good tactic to actually use in business plans and for your examination as well is, yes, calculate the net profit ratio on there, but then also combine that with calculating, because they'll have to give you the figures, so that you can also calculate the gross profit margin, the operating profit margin, and the return on capital employed. I've also done videos on all three of those on the channel, so be sure to check that out after this. Pop it down in your notes as something to actually go away and take some more notes on. So coming on to an actual working example now that you could actually take and apply yourself. This is just a simple example of an income statement, and I've put the formula on there for you as well. Now, we touched on in the previous slide where the net profit actually comes from, and you can see, and I've put it on there as paid, but Usually I just see it referred to as net profit. I see it in some textbooks, so I thought I'd include it anyway, just so you're crystal clear. But the 300 on there is the key net profit figure, but it's after, as you can see, the cost of sales, the operating expenses, the interest and tax. So the taxation is what you actually pay as an organisation, and what the government or the HMRC in the UK would deduct from your profits. The interest is on any non-current liabilities or loans, for example, on there. The operating expenses are all indirect expenses that relate to the business, such as maybe marketing or administration, whereas on the other hand, the cost of sales is all about those direct costs relating to producing the products on there. It could be direct labour, direct materials. All in all, if you don't have those costs of sales, then the products or services aren't made on there. But then take the actual formula on here, apply the figures. So you've got the 300 divided by the revenue, turnover, sales, doesn't matter which term you use, and you should have come to an answer of 30%. Or in other words, a good way to get it down in your answer to, first of all, get the ball rolling to explain it. For every £1 of sales that we sell of those products, or whatever example you're given in your exam, we've actually generated 30 pence worth of net profit margin on here. So a really good technique to get down there to start your answer off. But then you want to say to yourself, how am I actually going to analyse the net profit ratio? And there are, first of all, two key terms that you need to be aware of, and I've taken the figures from the previous example. So an absolute term is that £300 as a figure for the net profit, whereas a relative term is all about the percentage, hence the net profit ratio, and then we linked it into margins on there. The next key thing for the question you've got in front of you yourself is, well, I've got a figure in front of me, maybe I've got a couple of others from a competitor or a previous year. How am I actually going to go about increasing that net profit margin? Well, you've got two ways on there. First of all is looking at all the revenue streams and saying, how can we increase them or create new revenue streams? So that's got to go up. Or you've got to decrease the expenses. So making sure that all of our production processes are efficient as possible. We're cost cutting from some of our overheads. Do we have things that are just sat there idle that are taking up costs on there? All of that will reduce the expenses and increase the net profit. Because you have to say, well, which stakeholders, people or organisations that are interested in the business, who's interested in knowing the net profit? Well, definitely you've got to get down in your answer the shareholders, because they actually want returns from the business. You've also got potential investors who are looking to actually invest some of their capital. And also I've put on their suppliers, because if you're not profitable, or and it can link into bad cash flow management, you may not get some people or organisations who will want to trade with you. Because at the end of the day, you've got to say, well, what are we going to do with that net profit? And we touched on it before, because you've got two options: retaining those profits within the business to hopefully grow the business further down the line, a long-term perspective to make it more sustainable, or to actually distribute those returns. And that's where you get maybe a stable return of 3% a year that potential investors are looking for. This is how you develop your answer. And now we can take it on that extra notch with some real world application. And the first thing to put in perspective is you're going to have a scenario or an example given in your exam or piece of work you've got to do. And whichever type of business that it is, you've got to say to yourself that not all businesses operate in the same way. On the channel, I always refer to car manufacturing as an example, because I can picture in my mind, and I've been to lots of manufacturing warehouses before and operations, so I can really understand where the terms can be applied. So away from this, write down an example that you're confident on, whether that be a startup company, an established company, maybe a publicly listed company on a stock exchange, as you can see on the screen, because they're going to be at different stages of their business life. So if you're a startup company, you're probably going to be making losses. So being in a loss for your net profit, because you're heavily investing, you're trying to build up your client base. Whereas an established company, maybe like Coca-Cola, where they're looking for steady profit increases, making sure that investors are happy, and actually creating stability in the business that is going to attract future investment and to make sure they're sustainable in the long term. Public limited companies, they've really got to be looking after their shareholder wealth maximisation. This is all about two things for your notes. First of all is dividends going up, and then secondly, the share price going up. A really key term that you could apply in your work, because at the end of the day, imagine if it was your capital at risk that you've put down £100, £200, whatever it may be. You want security and assurance that you've got a real good sustainable company with progressive net profit, and then a good management team in place that are looking at all the ins and outs of the business, which link into that gross profit margin, operating profit margin, and finally net profit ratio on there. That could all be the difference in the company being successful or not. Well, that takes you through everything you need to know about the net profit ratio and margin. Be sure to subscribe and give the video a massive like. I really appreciate all the feedback as well. Click one of the videos on the screen. They're going to be so important to help you pass your next exam. But as always on that bombshell, I'll see you next time. Cheers.